I'm about to show you our high win rate Bitcoin strategy. So just to be clear, this is for advanced traders. This is not for beginners. I'm going to talk about system trading and high level concepts, and I'll try to explain it a little bit, but I'm going to assume that you're of experience with trading, you're comfortable, you're familiar with some of these higher level concepts. So this is our strategy going on Bitcoin. That is, it's an indicator and it's also a strategy tester. So it's back tested. And here is the back test result. This is order size 100% of equity. Even if we deploy everything every time, the max drawdown was only 42% for roughly a 1,000,000% return. Here we can see green is the system that we're going to be looking at, and blue is buy and hold. The profitable trades, it's dropped down to 79%. It was at like 85%, but it's a small sample size. Profit factor is 5.5, which is pretty absurd. So if we go into some more advanced stuff, Sharpe ratio is 0.171. Sortino ratio is 6.46, which is insane. No margin calls. Um, yeah. Now, a little caveat. So it's optimized and it's dangerous to optimize. I have a system, a version of the system. I'm not going to pull it up right now, but the main version of the system that I like is to be robust. My philosophy generally is a robust system is better than a optimized system. And the reason is that a robust system is more likely to continue to work in the future, and an optimized system is more likely to just be charting noise. But if a system outperforms by so much optimized, and there's a reason to kind of understand it, then it's something to look at. So when I talk about robustness, there's a lot of things that you can look at. And one of them is parameter sensitivity testing. Parameter sensitivity testing is where you establish that there's a wide range of variables in this for different system parameters, and it's still profitable with all of them. And then you pick something in the middle, not necessarily the best one. That's one way. The other that I like is cross asset testing, which is you take a system and you see if it works on different assets. And my favorite is different asset classes, cross asset class optimization. So we have a system. Does it work well on the S&P 500, stock market indices, gold, precious metals, and Bitcoin crypto? So what I'm showing you is not that. It's more optimized. When I make these changes, it actually, I think for some of the systems, it actually looks really good, but it generally makes their, yeah, I need to take, I mean, yeah, it generally makes the system worse. It's still outperforming gold than from buy and hold, like pretty significantly, but it has some robustness, but it's not as robust as the other strategy. That said, speaking with one of my young developers, he's like, yo, this version of the system outperforms on Bitcoin by so much, it makes sense to use it over the other one. So what makes it different? We're going to go ahead and look at it, but that's just the preamble so you guys understand that this might not work as well in the future. So some of you guys already have a red flag of, oh, well, 42% drawdown is a lot. Well, that's with 100% equity deployed up to 5 times in a pyramid. And you can always risk less. But if we look at buy and hold, the top of the last cycle to the bottom was about 77% drawdown. If we go to the cycle before that, the top of the cycle was 85% drawdown. What will happen this time around? No idea. No idea. I'm not predicting or pretending that I'm predicting. Maybe it's just a 40%. Maybe it just keeps going up forever. I don't know what's going to happen. But the point is that this is superior to buy and hold even before we get into drawdown. So the max equity, like we're way outperforming the return of buy and hold without even looking at comparing drawdown. So there's room here to pay taxes and take out from paying taxes and still be way ahead, which is for capital gains, we're looking at like, I mean, it's a lot depending where you live. But not financial advice. I mean, crypto, you have some wiggle room potentially. Anyways, Let's take a look at it. So the main difference between this system and the more robust system is one parameter, which is exit on a failed breakout. So when it comes to the main assets, US 500, S&P 500, gold, it's really about being in it for as long as possible with leverage and trust that it's going to go up over time. Um, but Bitcoin reacts a little bit differently where there's a tell at the highs. There's a tell for the top of the market sometimes where price makes a new all-time high or makes a new high and then fails and falls under, which formed as an exit signal instead of just sticking with the trend as long as the trend lasts. It's an early exit, and the early exit seems to be superior for Bitcoin. It also just happened. It happened once again in January, and it's also happened in August, where it's allowed us to get out much higher than the current price. I don't know how much lower it's going to go. And we can go back and look. Um, it worked decently in this period, but one of the things that it allows is you'd have less time in the market. One of the advantages of having less time in the market is you can allocate your capital on other things, right? You can put it to play in other places if you have them. And also, if you're trading crypto perpetual futures, which are really capital efficient, and you're paying the daily funding fee of being in longs, you don't want to be in the market all the time. So this is a little bit friendlier towards crypto perpetual futures as well. So why does why has failed breakout become a tell? I don't know, but it is. And if this continues to outperform, why not do it? Now, a lot of the advantage of this strategy is obviously it's makes a lot in the run-ups. It's not always the best, but it does make a lot in the run-ups. Doesn't always get out at the top, but I mean, buy and hold, you're never getting out at the top also. And that's always the benchmark I like to compare against. But when you have this system that we have, to me, the biggest highlight is that you avoid a lot of the bear markets. See how it didn't take a single trade from November 2021 to January 23? It was actually over a year with not a single entry. And some of you are like, I want an entry, I want an entry. Like, do you even consider how much money this saved you? When it had you exit all positions at $65,000 and re-enter a year and a half later at $22,000, can you even imagine how much money that would have saved you? Yeah, you didn't make money during the bear market, but it saved you so much money. And we see some of these other bear markets, it saved you from holding when price crashed from 6,000 to 3,000 at this 50% drawdown. It saved you from the stress of that. I'm using the Bitcoin USD Coinbase chart. Actually, the Bitstamp has a longer back test, but the back test, it looked really crazy. It traded like a meme coin at the beginning, so I don't know how relevant it is. Again, Bitcoin doesn't have the longest price history, so this is a reason to actually prefer gold and S&P 500 and trading those with leverage, but this is definitely part of my bag, and this strategy is part of my bag. So, um, let's look at ETH. I don't know that it works as well on ETH, but let's do a little check here. No, it didn't perform as well. So, I mean, that's a reason to think about is like, is it over optimized? Maybe is. So, um, but I mean, the performance is out of control. It's so much better, and it makes sense why. And again, this still outperforms buy and hold on gold. And what about on Nasdaq? It actually outperforms buy and hold on Nasdaq. It might look like it doesn't, but 26% drawdown. Nasdaq also had an 85% drawdown, like Bitcoin. Actually, it's had several insane ones, but in the 2000 bubble top, it drew down like 85% almost. So, yeah, I mean, the strategy is actually still pretty robust, but the asset selection is important. So, if you're interested in getting the system or learning more about it, there's going to be a link in bio. You can check it out. I click on that link, it'll give you more information. It's going to ask for your email and some other info, and I'll start emailing you info. You get access to the free Discord and you can evaluate it before you want to buy it. But if you want more information, just fill out that link. Anyways, appreciate y'all, and aloha.